streaming. We're away. Beautiful. So we'll give everyone a bit to tune in. As you said, I'll bring it up on the other screen if you want, and have a look at all the comments coming in.
Is that chat?
The chat room. So we've already got Spice Dog, Leonard, Carl, Sam. Thanks for tuning in, guys.
Cool.
Oh, geez, the comments are already rolling in, guys, which is fantastic on a Friday night. We've been trying to do this for a while. And
cool.
I'm just going to bring it up again here. Share on Twitter, and then we're away. So, guys, share this around in your crypto groups on socials.
Definitely.
And then we're going to have a look at why Bitcoin nearly went to zero on a couple of order books today.
Pretty crazy.
Yeah, it got quite out of control, especially on anyone that was trading on any leverage accounts, that's for sure.
And then I'll introduce you two properly as well.
Okay, cool.
You guys, share this around. Oh, background noise. We'll cut that. Oh, wow. We've got 300 watching already. That's a good start. So smash that like button, guys, and let's go have a look at the chat room and introduce our guests. So a lot of you will already know Troy in the middle with his Discord and from Crypto for Blokes, and Kyle, he's got his own little Facebook group as well now and his own Discord, I believe. You guys have been trading a bit of everything lately, but particularly crypto. So do you want to maybe do a brief intro each for those that aren't aware of who you guys are?
I'll go first. G'day, guys. My name's Troy. I've been trading since the middle of 2017. Used to work in real estate and then went full-time in crypto trading in about September of 2017 during the month that China banned Bitcoin. So I thought I'd made the worst decision in my life, and it turned out to be the best. Been trading full-time since.
So some similar chart action today, which we'll get into as well.
Yeah. We've seen
that's a very, very modest intro, Troy. I reckon that's a pretty modest introduction.
Pretty modest. Yeah, made some life-changing money in the process, but that's the bonus that comes with this.
Let's just say he longed Ethereum at $3. All right.
No. Anyway, yeah. So just been full-time trading since. Absolutely love it now. Now I'm delving out into global economics as well, and I think that's the rabbit hole you take once you get into cryptocurrency. Is you understand why it was implemented in the first place, and then you start to go down that rabbit hole in depth. And what we're seeing right now is history being made on the charts, and that is because of the global financial crisis that we potentially could be falling into right now.
For sure.
And and that's what Bitcoin was born out of, right? So Absolutely. Here we are 10 years later.
Kyle, do you want to introduce yourself?
Yeah, so I started trading when I was, in grade 6 or something like that on the stock market game in primary school. Not sure if you played that or not.
I did.
But just always been obsessed with markets and everything like that, and always wanted to be a trader since I was a little kid. So, then I went to university, studied economics and finance in Melbourne at Swinburne University. And then went and did other things for a couple of years, and then started trading Forex for a little bit, and then really got into crypto around early to mid 2017. Obviously experienced that unbelievable bull run. So I think I'm pretty much deep-seated to be a bull for the rest of my life on Bitcoin after seeing that.
I guess I was going to say, my first question would be, what's it like coming from, not many people study finance and economics and then go all in on crypto. It's very hard to change probably that, whatever you want to call it, the book smart mindset that disagrees with the crypto narrative.
Yeah, 100%. And especially for a long time, I was like, Bitcoin, that's the biggest scam ever, because you get this traditional finance sort of ego against it. And that's why you still see it. Look at Peter Schiff, for example. I know a lot of those guys out there that are traditional and they've worked in institutions and stuff like that. They've studied at university. It's a lot different to, especially a lot of the guys in Crypto for Blokes and stuff like that. He's, your average Aussie guy.
Yeah.
and probably got onto Bitcoin through one of his mates or something like that. So it's definitely a different avenue. And I definitely had a big education ego against it for a long time. I was like, what is this? This is a load of crap type thing, until I really got into it and started researching a lot more and discovered what mining actually was and what sound money was, and how it was really more of a hedge against the current financial system, which obviously has a lot of flaws, which we're experiencing right now. So, yeah.
And I mean, we kind of talk about how the gold bugs don't like the Bitcoin guys, but I think that, the stock market guys think that the gold bugs are crazy, and then the gold guys think the silver bugs are a little bit weird, and then all those guys kind of think that Bitcoin's a scam, and then you've got obviously finance, and slowly we're having these people that are leaving Facebook or Google to go work at crypto startups, and it's just that the weight of numbers, and I think we're kind of hitting that critical mass coming out of the bear market and whatnot. So any quick overall thoughts on the crypto market from either of you guys before we have a look at the charts?
Overall thoughts at the moment. Well, we just experienced a day that I think will be talked about probably forever in the Bitcoin world, that's for sure. And, we're certainly experiencing that worldwide in all markets. I think the biggest thing for me right now that I'm noticing is Bitcoin USD, especially like on your margin trading platforms, mainly on BitMEX, right, is tracking the Dow Jones Industrial Average futures almost exactly. Like it's pretty much candle for candle on the 5-minute chart. It's crazy. Obviously, we decoupled for a little while yesterday when we had that huge cascading liquidations. I was hoping that after the liquidations, we'll probably get into this a little bit later, after the liquidations finished resolving on BitMEX, that we would decouple from the Dow Jones. But it seems like now that the liquidations have finally been resolved on BitMEX and we're back to sort of what you could consider normal trading again, it's just started mirroring the Dow Jones exactly again. So 100%. It's interesting to watch.
And don't mind me, guys, when I'm looking at these other screens and trying to keep an eye on everyone's comments. And we'll take some questions at the end as well, guys. I think I completely agree. I tweeted the other night that Bitcoin had started to diverge and go up when stocks kept going lower, and it was after that initial sell-off when gold kind of bounced back a bit. And we've had these glimmers of hope where it's like, can Bitcoin not even do its own thing or be a bull market? It's just, can it be uncorrelated? But it's kind of failed every test so far, and that sucks. And even if it fails every test in the short term, it doesn't mean that it's going to fail. Everything can change next week, and I definitely think it's going to change in the coming weeks and months. So anything you'd add to any of that, Troy? Or
no, not really. Nothing really to add to that at all.
Look, for me, I think the thing that people really need to be aware of right now in the markets right now is there's a big difference between a correlated market and a liquidity crisis. What we're seeing right now is a liquidity crisis, which means if you own heaps of Bitcoin, but your business is going bankrupt, what are you going to do? Are you going to hold your Bitcoin, or are you going to sell your Bitcoin to keep your business going? And most people that I've met and stuff like that are in the Bitcoin space, a lot of them are entrepreneurs. A lot of them are entrepreneurial, mostly guys as well, right? A lot of them are entrepreneurial guys. There's a lot of women in the community as well. But a lot of the guys that I've met, they own businesses as well. And a lot of them will be feeling the pinch. I mean, I had 2 businesses that went under last year, and, I've seen this whole thing coming and unfold over the last 6 months. And it was just the coronavirus was the pin that popped the bubble, which everyone keeps using, right? I don't really like that analogy, but it works. And so that's sort of what we're seeing right now out there in the market. So I think there's a big understanding that if, there's a difference between liquidity and a grab for liquidity. So if you own gold or you own stocks or you own Bitcoin and you have a need for cash flow in your business or in your life, or maybe you're scared that you need to have that money in cash physically because the whole world's going to go to absolute, baloney, and you're going to need to barter with people or whatever. People want that secure feeling that they're safe in cash. You can't lose cash if you're holding it, right? And that's the crisis we're in right now. So I think a lot of people are like, oh, Bitcoin's failed. For me, it hasn't failed yet. For me, Bitcoin will fail being a hedge against the economy and be uncorrelated and all that sort of stuff if we start to see big monetary policy released by the government and reserve banks and stuff like that. If we start to see that unload into the markets, and over the next 6 months, Bitcoin doesn't return to an uptrend while the rest of the market continues in a downtrend, that for me will be the failure. But at the moment, we have to remember what happened in the global financial crisis in 2008, that at the same time, gold dropped by about 33 to 40%. So I think, people have to remember that at the moment, it's just panic. Everyone's just selling everything. And obviously, Bitcoin is not something that people want to be holding on to. And if you do have Bitcoin gains, we'll remember a lot of people bought in at 7K, it went to 10K, people were taking profit on that. And then obviously a lot of people jumping on board and shorting it. And then we have the liquidation cascading as well, which is I think why we went so low. So yeah.
I think a good example for people, one of the first times that I'd been trading the macro side of things was when Trump got elected, and there was a big panic and a big sell-off. And I love telling people that money doesn't die and go to money heaven. It's always rotating between bonds and gold. And we had a really sharp sell-off in everything, and gold spiked. And I was thinking, this is great. It was when I was in sort of that, that gold bug stage as well. And all it was people just rotating their money going, okay, Trump's going to be way more bullish for this sector and we need to get out of all these stocks and into these stocks. And by the time the market had reopened the next morning, the volatility had calmed down. The whole index was back to where it started, but it was all the money just had to rearrange what sectors it was in, and gold went back down. So I think we're kind of seeing it's similar things at the moment with people rotating into bonds or into cash, as well as a general panic. But I want to talk about the cascade we saw today. So I'll bring it up for everyone at home, but you guys know the tweet I'm talking about when Sam from FTX tweeted out that he's got a bit of an insane theory about BMX having this hardware issue, and basically saying that, look, he doesn't believe that it was the reason that they went down and whatnot. And he's talking about these liquidations. When it starts a bit of a cascade, everyone's on leverage. So you've got to have, $1 for every, dollar of liquidity. And once we start to get a spiral, well, because everyone's trading on 50 or 20, 100 times leverage, as soon as you get these huge orders that are being liquidated, you're just pushing it into the books. And we saw this continuous flow of, $10 million liquidations, and they just didn't have that those buy orders sitting in the order books. And so it started this downward spiral. And I'll bring up another tweet. We actually saw very clearly this arbitrage opportunity. Here it is. At one stage, it got out to over $1,000, where BitMEX was $1,000 less than Coinbase, Bitfinex, some of these other exchanges. So they were just...
It's crazy.
For people at home, they were just stuffing in these liquidation orders and no one was buying them. And that was just causing more sells. So they had to go down. They had to stop markets. And that's why the title of this video is The Day Bitcoin Nearly Went to Zero. Because if they hadn't have stopped that cascade and gone down and waited for the bounce to play out on other exchanges, and all of a sudden, it's almost like the exchange freezes and it hits your stop loss if you're a trader. But then the time it comes back online, price is back above your stop loss. And so that's kind of what happened today. I definitely think there's some weight in that theory, whether or not that's exactly how it played out. But this is the danger of margin exchanges, where the number one by volume, or volume if you want to call it that, 100 times leverage, they're derivatives. This is where we're getting our price discovery from. And today's a real wake-up call, and it could happen again. But I think what I want people at home to understand is, even if the price went to zero today, and that is going to be the reported price in all the news and websites, the actual real price discovery of Bitcoin, a lot of it happens in OTC desks or these other exchanges that have been around a while that don't have as high a margin and whatnot. So I think it's just something that we need to be aware of, because gee whiz, the messages I was getting today, I literally saw people talking about that the world was ending, it's different this time. And that's all because that whales and 100 times margin is just pushing the number on the screen lower, and that causes that panic.
Yeah, definitely. And one thing to add to that as well is, I don't think that it would have ended up bouncing on other exchanges, because all the arbitrage bots are pulling down the other exchanges nonstop as well. So I actually think that what they did was basically pull like a circuit breaker, like we've been seeing almost every day in the stock market recently. And maybe we need to have something like that on margin exchanges in crypto where it freezes for 10, 15 minutes or half an hour or something like that, like they stopped at 4 today. Maybe they need to do it earlier, because I don't think that we would definitely wouldn't have seen 3.5K. I don't think we'd probably be sitting around 5K if it wasn't for that cascading liquidation effect on BitMEX, and then the rest of the market arbitraging that out.
100%.
So
even the 3.2K low that we made to end the bear market, we capitulated from 6. I think that has very similar elements where, yeah, we could just go on these runs where it's not really fair price discovery, in my opinion. And just to clarify what Kyle was saying just before, guys, with that arbitrage bots, what you can see here, I'll bring up on the screen again the difference in prices. We've got these bots at home that are saying, oh, gee, look at the price on BitMEX. Let's sell any crypto that we've got on Coinbase and Bitfinex and Binance, and let's go to Tether. Let's get our Tether, or obviously you can only deposit with Bitcoin to BitMEX, but this is kind of how it works in the background, where they're trying to get money or funds from one exchange to another to exploit that arbitrage opportunity. And when there's $1,000 difference, people are selling as much as they can on one exchange to try and get their money to BitMEX to buy and push it up. And we saw the blockchain get congested today for Ethereum because of all the Tether Omni transactions, Tether on Ethereum transactions, as well as the Bitcoin blockchain get clogged as well.
Yeah, and also what's happening as well is because you've got so many bots that are trying to buy up, especially on all the other exchanges, they're tuned whatever their algo is, right? It's buying like crazy. And so when BitMEX shut off its exchange for half an hour, we instantly saw that massive bounce. And when BitMEX came back online, Ethereum had a 5-minute candle that actually went up 100%. Right? It's like what is going on right now? There was some definitely crazy mechanics with all the computers going on in the back end of different exchanges. And I guess this is sort of what happens when you have all these robots trading for everyone. And this is why they have circuit breakers in the actual stock market, because otherwise, over the last couple of nights, we would have seen the exact same thing when the Dow was getting stopped out, when it was dropping 7.5%.
Exactly.
It would have seen exactly the same thing, and it would have just gone 30, 40, 50% before it bounced. And the reason why they have it in the circuit breaker is because Bitcoin is more like a commodity, right? So no businesses go bankrupt if Bitcoin goes down too low. If the Dow Jones goes down too low, like the world ends for a lot of people. Like people lose their jobs and stuff like that. That's why they have circuit breakers. I don't know, maybe something will be put in place in BitMEX or something like that. Maybe they go and they look over the liquidation engine, but I don't think that they will unless they actually take a hit from this. I mean, I've been trying to look at the update on the insurance fund. It looks like they've lost about 2,000 BTC, which isn't really that much because it was at 35,000. So, a lot of people have been like, oh, BitMEX is going to go under and all this sort of stuff. Well, if their insurance fund is accurate and Arthur hasn't been taking that Bitcoin to buy yachts and party on, it should be fine. And I was saying to Troy earlier, I'm like, what they need to do to stop this from going down, like this just out of control, is they just need to take like 5,000 Bitcoin and just wipe all the liquidations and take the hit. And that's what the insurance fund is there for, right?
Or I mean, if I was Arthur or CZ in these situations, I know these guys believe in Bitcoin and they make a lot of money, but geez, I'd be buying at these prices. If it's you're seeing this $4,000 Bitcoin on the screen, you believe in it long term, I'd just be buying. But just quickly, I'll bring up the 2 candle wicks we saw. So there was a nearly $2,000 candle here within an hour, a 49% bounce to get Bitcoin back to 5,800 after it touched 3,800 there. And the second wick that Kyle was talking about was Binance futures on Ethereum, when it went from $110 to $320 in very, very quick time as soon as we saw that cascade stop. So, Troy, you've been pretty quiet there. What's on your mind? What have you been trading today? Do you want to give us something for the people at home?
For me, I'm waiting for market structure before I look to trade. I tethered, and I'm not looking to trade this volatility. We're seeing 20% swings and up to 100% swings on Ethereum. To me, that's not tradable. I have setups that I follow. I have rules that I follow, and they are not in these 5-minute candles at the moment. I'll make more money by protecting capital and waiting for some market structure. At the moment, we've gone from 10.5 to 8.5 down to 5.5, down to 3.8 within 2 weeks, 3 weeks. I have no interest in getting back into the market just yet. I buy bottoms and still tops. I wait for that bottom.
Is this your like day trading account, or do you have a long-term stack that you're not touching different, or?
I've pretty much gone completely into Tether because this could go to zero, not necessarily all the way to zero, but I've got some pretty bearish predictions, and they are much lower than this. Doesn't mean I'm going to be bearish and only trade bearish, but the reality is we have made it this far now. An extra $1,000 lower than here is not out of the books. And if we look at every drop we've ever had, the first dip is never the bottom. There's always a bleed out further before a bottom is found. So I'm not going to be this knife catching hero. I'm going to wait for market structure.
Yeah, we had someone ask before in their group about does this prove the what was it, hyperwave theory about $1,000? And I'd say no, that was invalidated because of the huge run to 14,000, and it's had another sort of cycle within a cycle there.
Yeah.
Can we go to $1,000 if the stock market goes into a multi-month correction and goes down 50, 60%, and there's serious, recession, depression style stuff? Then yeah, of course we could see Bitcoin going down in that situation. But I'm still of the opinion that it's not too bad today. I think that was really caused by a liquidation cascade, and price probably got lower than what it maybe should have. But do you want to bring up your charts, Troy, and talk about the structure you're looking for or whatnot?
Cool. All right. What I might do is quickly just start on this chart. This is BLX. This is Bitcoin's index. It goes all the way back to 2010. I want to show you something real quickly that I've just taken notice of. We'll just invert this, and we can draw these trend lines coming down from the previous market cycles. So this is now Bitcoin's entire history inverted. So that's our 20K top here. That's our 14K top here. And what we can see, it's really basic TA, just off a simple trend line, is that when we finally broke out of this, just as any shitcoin you trade would, we broke to the upside. Right. So if this was an altcoin trade and you've had this, you're running into it, you're grinding into it, and you finally get above, you'd be buying this. This is where you'd go for the long, right? And this is exactly what's just happened. So for me, we could end up making potentially a high all the way up to here, for instance, before we start rejecting. So if we come down and then start forming a bottom here, so we'll just go back to normal. If we start coming down here and then creating a trading range through here, that's when I'll be looking to get back in, all right? If we then go and add an indicator called pivots, this one's here, it's actually got a point down here, right? And that's saying this is where you should be looking if you're a pivotal trader. And I know a lot of institutional money use this. If you look over here in 2018's bottom, look where we fell to. Everyone up here was delusional, and they were like, we'll never go to 3K. They didn't listen to me when we're at 20K. They definitely weren't going to listen to me here. But when we finally made it down to this pivot, no one was interested in Bitcoin, right? And this shook a lot of people out. We could very well be in the first candle of multiple before we end up down here. So I'm not in a hurry to buy back in yet. This is very low, and to me that seems far too cheap. But we've just seen, look what we witnessed today. Who's to say that won't happen again?
And what would be your bullish scenario that would invalidate that for you?
The bullish scenario would be this chart here. We'll just zoom in the weekly. No, sorry, we'll go daily. It's just a particular pattern I trade is the broadening descending wedge, and what we have been doing is setting up a major one through here, right? And we've just done the liquidity grab of it. So if you understand how to trade these, you can actually, this is the liquidity grab. This is the most painful part for a bull, and this is where the most liquidity is. And if you look at our 24-hour volume, you'll actually see that today is like one of the biggest days ever for trading volume. So this is the liquidity grab. While everyone was panic selling, if this was the bullish scenario, this is where everyone was buying, right? So I'll just compare this to another chart so you can see the effectiveness of this. We'll go to gold on the weekly. We'll go back to the global financial crisis of 2008, right? And that very, very same pattern was right here. And this is the most painful point for the bulls, and that's where we are right now. So that same trend line, you've got the 3 touches. It looks like a bit of a speaker in the way it works. It comes out and gets wider and wider, hence the broadening part of it. But that's what we're exactly experiencing right now on Bitcoin. Oh, that's XBT. Sorry. We'll get back to it. That's what we're experiencing right here with Bitcoin. So this is exactly the same thing playing out. We're in a global financial crisis. This is digital gold 2.0. So if we can stay above this moving forward and start to create some market structure bottom ranging through here, I'd be looking to go long out of that. Until we on a lower time frame, maybe like on a 4 hour or something, we start to create a bit of a trading range, well, I'd be interested in getting back in. I like to protect my capital. I don't like to be a hero when it comes to something as serious as this, because when we're down here, it only has to move $400 to be 10%. We're back up here, and I had to move quite a lot to lose 10%. But down here, that could happen in a second. I actually watched a candle today. I think it was about a $400 move in about a minute.
Mm-hmm.
And when that starts happening through here, that's greater, right? That's from 3.6 all the way to 5.2 in a minute.
It's crazy.
Okay? So you're technically gambling if you're trying to trade this stuff, or you're not respecting your capital at all if you're trying to pick bottoms like this. If we go to Bitcoin on, say, the 4 hour, look at the daily even. We go to our bottom in 2000 and where are we? Here, this bottom. This is a clear wick-off reaccumulation through here, as well as a typical ascending triangle here, right?
100%.
So that's telling me, okay, we've got a bottom. And then if we go to the charts I published back then, I called the bottom, published them all here saying we're about to take off, and that we did. So that gave me a clean entry. It gave me time to accumulate while I was trading this to get more and more Bitcoin. And like I was saying before, it only takes a $300, $400 move down here for 10%. So you can make disgusting amounts of Bitcoin while we range low prices like this. It's much harder to do that while we're up here.
Just if you want to keep that bottoming chart up on the screen, it's probably something, and one of the reasons I want to have you guys on tonight was to talk about the different styles. So again, broadening wedges was something that I'd never really traded much before, and again, you guys have been teaching me a bit about that, which you can never have too many tricks up your sleeve. But I think we did our video in January when Bitcoin was $3,400, talking about the Adam and Eve pattern. So some guys have had their Elliott wave counts, some guys have got their triangles. For us, it was more about that Adam and Eve and really the psychology of all of a sudden everyone was talking about this, the hyperwave. We're going to $1,000, and none of those calls were around when we were even at $6,000, and it was almost embarrassing. That was the kind of the ringing the bell at the bottom moment for me, like, because I'm a bit of a permabull, and it was almost embarrassing. And people were like, "What are you talking about? Like, how on earth can you be possibly bullish? It'll never go up again." That was the sort of responses I was getting. So we've got to keep all those things in mind. And I saw a lot of that today. As I said, we saw a lot of people asking about, should I sell when it was down at 4,000? Well, no. If you were happy with the amount of money you made, you should have taken some profits at 10,000. But yeah, anything else to share, Troy?
Maybe just that pattern, just something for you guys to watch it for you viewers. A pattern to learn and pay attention to. It's called the broadening ascending wedge. Now, it's the opposite to the descending. It goes up in nature. And I was going to show you real quickly just how effective this is and why I'm going to tell you. So I'll just quickly draw it with a pen. So when you come down, you usually get 3 dips, okay? And on the 3rd dip, like we drew before, when you break the trend line, it's a liquidity grab through here. This is when the bulls are the most hurt, and vice versa for the bears. So we'll just take that same logic real quickly and apply that to here. This is the ascending version of it. So as we come up through this, you get to a point where it breaks up that trend line, and this is the most painful part for any bears, which is when we get these massive liquidation candles, the short squeezes, all right? And then we ultimately end up falling back into the trend, getting under it, and then back and retesting it before we then go on a market cycle and fall. And I'll just show you why there's that same fractal played out a second time here, all right? So we'll bring that up on the daily. And I'll just show you the same fractal played out twice. Draw 2 trend lines, and you can map this entire market, right? Our top was the point of break, liquidity grab. The bears are the most hurt here. The candles are massive. A lot of short liquidations. Fall back in, get under the trend, retest, and then we go down from that point onwards. So if there's anything you could take away from this from me, would be learn these broadening ascending wedges on the macro scale, because these are what make our market. And now that's what I'm watching for on the large scale through here, which is the opposite of it. It's just the bullish version where I showed you on gold. And we're doing the most painful part right now, all right? So if we do reclaim this and we do start to range in this, that will start to give me a hint that we'll probably start heading up. I try to have no bias usually, and just try to map all possibilities and then play what starts to play out. But as soon as it's invalidated, I usually get out. I was a little bit biased through here with the halving coming, so I didn't play from here to here very well. But from here downwards, it was clear that you had to have a stop loss because there was bear flag after bear flag through here.
Mm-hmm.
If you know how to trade bear flags, there's pretty much you fall to a point, you get to a point of consolidation, and then the flag was from here to here was your target to the downside once that breaks, right? So if we bring that from the point of break down to here, it gave you a nice clean target down at 3.8, and that was simple TA. And a few people in the Discord actually took that trade, and they out traded me because I didn't take that. I went to Tether. Pretty impressive. But the market can be that simple at times. So on the macro, you've got this massive pattern playing out. But on the small time frames, it was a bear flag that caused us to come into the liquidity grab of this potential pattern, right? Understanding these elements and bringing them together is what I find helps you make you a better trader. If you stick to one style of trading or one specific set of rules, I think you're going to have a hard time staying profitable because the market is constantly changing. So if your strategy works in a bull market, fantastic. We spend more time bleeding than we do going up. So, well, as of the last 3 years anyway.
Yeah, I might just share a bad trade or a mistake I made recently with that same pattern. I'll see if I've got it up on my...
Feel free to take over.
Feel free if I've got it up on my charts here. Oh, sorry, I'm going to share the screen so you guys can see what I'm looking at as well. Okie dokie. No, I must have cleaned my chart. So let's go over to my trading channel. And guys, we're getting rid of Slack soon. We're going to the Nuggets News app and the new portal. Here we go. So this was only on Wednesday when I did this write-up and spoke about, you know, we've got to be honest, as much as I'd love to be bullish, this is a classic bear flag and it looks like it's going to break. And we've done the units and most of you guys at home know how to trade a flag and we've got our measured target or whatnot. And I sort of had my bias where I was thinking, you know, there's no way that it could possibly drop a couple of $1,000s from here. And I think the next day I was looking for a bit of bullish divergence on the 4-hour chart. ETH in particular was looking like it had a bit of strength, and we had this nice hammer candle here, divergence on the 4-hour, and I was looking for some follow through. But I think I did preface it here by saying we need to be cautious because if the stock market rolls over and crypto looks like it wants to follow it, then all bets are off. And as you guys know, the stock market definitely rolled over and crypto definitely followed it down very hard. Troy, Kyle, did you have any different techniques or price action you want to share that you're looking at?
So yeah, we got a really good trade today in my Discord actually. Do you want me to share?
If you can bring your screen up, yeah.
All right. Entire screen, here we go. Oh, it's not letting me, oh, here we go.
Are you still sharing, Kyle? Oh, no, you go.
Yeah, so BitMEX is obviously going pretty crazy. This is my BitMEX chart, actually. You can see we're down below almost all my other TA. BitMEX was going pretty crazy, and it was sort of through this area here, actually, that the liquidations sort of started to disappear. And I was updating and I was chatting to the guys, and I said, look, I think that BitMEX's liquidations have actually finished. They've been cleared out now. We should start to see a bit of a rally soon. And so when I'm trading low time frames and stuff like this, you just look for anything really, like a support resistance flip or something like that you can enter off. So once I've got bullish bias, right, and this looks like it was starting to play out like a bit of a bear flag, and it looks pretty choppy and pretty gross here. But if you look at Binance chart and other charts like Coinbase and stuff like that, they were just a lot more clean, a lot more bullish. And that's because they don't have the pressure from the liquidations pushing them down. And it was sort of like through this area here, and I saw the liquidations start to dry up on the charts. And there was still a huge gap in between the index price on BitMEX, which is the blue line or the purple line, depending if you're running what color scheme you're running, and the actual price, right? And I was like, that gap needs to start closing. As you can see, it's only about $100 now, where it was, you were saying it was $1,000 for a bit earlier. I didn't see it when it was that big, but I saw it at $400 and $200 and stuff like that. And as soon as those liquidations disappeared, that gap was going to start closing. So I got a really nice long off that. And because the price action is so crazy at the moment, it ended up being like a 6-7% move in just like a couple of 5-minute candles. And I basically looked at this and said, the first level of resistance is going to be here for sure, and then also mirrored that up with futures on which is the US 30, right, which is the Dow Jones futures contract, and just matched that up. And we had this bearish divergence double top through here. And I saw that was playing out at the same time. And I was like, this is going to pull back for sure, at least to retest this level, because it's a really key level that I've been watching for a while, and I'll show you why. It was the very bottom of our low of our 2018 December bottom, right? And it's also a bit of a support resistance flip, but it's not really that big of a level here, but obviously becomes significant there, and then back here, right? So it was sort of using a bit of what's happening in the stock market and seeing that this needed to come back down and tag this level before going back up, or it was just going to come down, nuke through this bearish retest, and then we'd be looking for new lows underneath this level, right? And sort of matching that up. And it's something that I've been using for a little while now. That's been actually really helpful, because it seems to be that the Dow Jones moves almost at the same time or a little bit in advance. So if you can't quite understand the setup that's happening on BitMEX or Binance, right, you can go and look and see what the Dow Jones or the S&P 500. I think it's tracking the Dow Jones a little bit closer than the S&P, and using that to sort of confirm your trade theory or not. And so, yeah, because I had the bearish divergence and obviously coming up to this strong level of resistance here, took the sell because, it's so volatile at the moment, there's no point staying in it. But for me, at the moment, when I'm watching on the low time frames, if you're crazy enough to be trading low time frames right now, I'm just using really small position sizes. So, like, if it drops 10%, I'm not going to, be excluding my risk or anything like that. But what I am looking for, I think, will be very, very bullish. And I'm not sure if it's going to happen or not, but if we can break through this level and confirm this is resistance, we get a support and resistance flip here at 5,500. I think that's going to be a very, very strong sign. And we might end up seeing the main reason why we did dump so low, because I thought last night we probably should have bounced off here and gone back up for a bearish retest of that at least. And all of this probably shouldn't have happened except for the BitMEX liquidation engine, right? So for me, if we can get above this level here, I think that's quite bullish. And that's pretty much one of the main things that I look for in my technical analysis, is when we have a really strong clean level. And this is obviously low time frame. It's best when you're doing it on the weekly time frames, right? But this is a really good example because it's happening, and people will be able to see if it happens in the next couple of minutes, right? You have a really strong key level, and it all comes down to level selection, right? But if you can get good at selecting good levels, and this one is obvious because you got a touch here, and you've got obviously this main touch here as well, right? And then obviously we've got resistance here. So support, broke through, came back up, tagged this as resistance, tagged it again as resistance, right? So now if we flip that into support again, this is a really nice area to be looking to get into a long position. And it's the reason why I like trading like this and getting in positions like this is because if this then fails, right, then it's easy when we get stopped out here and you don't take very much of a loss. And this is a really good way of trading with the trend, but also buying the bottom of a move as well, because you're buying the bottom of this upswing here. If you weren't around on the computer or you're doing something, I was at home, I wasn't at home when all this price action down here happened. So I didn't get to get in through here. So I've been looking for entries and stuff like that throughout here. But that's only for my margin trading scalping account, not for my main account, right? Which is important for people to understand. Me and Troy both have separate accounts, obviously for low time frame trading and scalping and stuff like that. And then like your long-term holdings and things like that as well. So Yeah, that for me, it's just simple support and resistance flips and key level selections. And the other thing as well, like this might not claim this as support and resistance flip. It might end up being an SFP. So we might have something like this. We have a big wick that leaves above, right? And what I'll be looking for is this to actually clean up this wick here, right? And take this out. So we'll end up having a nice red wick that goes above here and then closes below. And that would be a big indication for me, especially if, we look at our indicators, we're sitting quite high. So just got a lot of room to move back to the downside. I think it will wreck a lot of people that have got in throughout this area here. If we do have an SFP through here, it would trap a lot of people that are trying to get long above here, which is why I'd like to wait until it comes back and confirms a support down here, and you want to get in down here. You don't want to be chasing it, especially you don't want to be getting in on a live candle. If we can break and close above this level on a 4 hour or 1 hour, that's even more of a confirmation. But more than likely what's about to see happen, instead of this actually coming and claiming supports flip like that, we're going to see is SFP like that. People will jump in, will trap short, will trap breakout longers above resistance and then close below it, and then they'll be forced to puke their bags, which will then add extra selling pressure and push us down. So that's a pattern that plays out a lot. It plays out a lot in all markets, really. It plays out a lot on Bitcoin and Ethereum, and it plays out all the time on gold and also the S&P 500 and the Dow Jones. Like almost every single move recently, top and bottom, has either been a morning star, shooting star reversal, or an SFP on the Dow. So it's a pretty common pattern. If you learn how to play it, it pops up all the time, and it's very, very high percentage play, and it's low risk as well because the way that you trade this, right? So let's just say that this breakthrough, right? And then we close back below here. So this would be a red candle, right? So we'd have the wick above here and we'll close here. So I would enter, my setup would be like this. I'd enter my short position. Right, and I wouldn't put it exactly at the wick, because when you create a wick like this, it's also a target range for the bears, right? So the bears will be targeting, and they'll be actually trying to push the price up to get above here, so then they can market short into all the breakout buyers, right? So they're trying to try and fake out the market, make everyone think we're going up, and then they market short into it, pushes back down, and then they market short again, which causes the panic because people are trapped above here. Now we're below resistance, and then they paint and they puke their bags, and they start to trade back with the bear whales, right? So yeah, I don't like to put it right on. A lot of people put it right on. You want to give it a little bit of space. And then the target is usually FTA, which is your first trouble area, which would be the first level of support, which, it's probably going to be through this area here. And to be safe, you would take it through there. So it would sort of be like that. And, that's a nice little trade up 1.09 R. So cool. Yeah, that's pretty much how trade SFP. So that's all the plays looking for at the moment.
One thing I can add to the TA side of this, if you want, Alex.
Yeah, mate. Just quickly, we've been going 45 minutes, so I want to cover a couple other things. But yeah, go for it.
Real quickly, I'll throw this on. Something that you guys can take note of. It's a little bit odd. So this is the BitMEX chart, right? This is Bitcoin. I'll just hide this real quick and manually draw this in. So they started back in 2015 on their chart, right? We'll just get rid of these two lines. Just real quickly, we're just going to add a fib retracement from the bottom here, right, to the very top here. Make it nice and precise using the magnet tool. We'll just go into it real quick. We're going to change the coordinates to 300. That'll bring it over here, and look what we just tapped, which also picked up bottom and the launch spot from here as well. So we're at a really, really critical level here where we've landed. We're going down to the 1 hour here, and you can just see where it's wicked straight into it, right? So this is the retracement for this is where you want a market to come back to before it continues. This is the healthiest spot in a bull market for it to come back to before you carry on. And we just have straight into that. And it's only found on that BitMEX chart. But we can see it picked the bottom here, right? We can see this level's been heavily respected through here. And we can see the 88% fib here. This is all natural market cycle through here. Right, so if this is a 5-minute time frame and we were watching this play out on a 5-minute and these are small candles, that's exactly how it would play out on a 5-minute scale as well. So even though we're macro, we're down here. This is very bullish as well. So as long as we can hold above this, there's a very serious bullish argument that our bottom is going to be here. All right, because that is what you want to see happen before you carry on. This is a retest of a 382, which is very bullish. And another point, but you can see to the dollar, pretty much that picked that bottom. All right, I'll leave it there. But you can just see how effective on a macro scale something like that can be if you know where to look.
For sure. So just quickly, the last couple of things that I want to touch on for everyone at home was the Ethereum had a cascade as well today. I'll just bring up the maker tool at home. So you can go to mkr.tools/system, and this gives you an overview of all the maker loans that are out there, all the CPDs. And what we can see is that the amount of Ethereum in there has really dropped off, and there was a lot of liquidations today. So as the price of ETH falls, all these people have to pay down their loans or put up more collateral. And the other thing that leads to is a big demand for DAI, because people want to pay down their debt, their loans. And so what we saw today was the lending rate for DAI get up to 47% on some exchanges. So guys, if you've got some spare DAI, you've tethered out or you're sitting in some stable coins, now might not be a bad time to earn up to 47%. It's probably come down a bit as the time we speak. Speaking of paying down your debts and bailouts, we also saw the RBA do nearly $9 billion worth of repo market emergency operations, just like we've been seeing in the US since September. And as you know, once that starts, it's normally a band-aid that you can't pull back off. You normally end up putting more band-aids over the holes in the pool and trying to cover it all up. So I'll cover that in more detail in Sunday's video. But we have been going nearly an hour, so I do want to wrap it up. But any final thoughts for people at home, guys? I think there's so much that we can learn from today's price action.
Market structure, be patient. Don't be the hero trying to buy. Wait for this wait for the same kind of formation that 2018, 2019 put in for us before we carried on. This can go lower, and don't it's great to be a perma bull on Bitcoin, but we saw what just happened. Let's say BitMEX turn their this happens again. A 10 mil cycle kicks off a second time, right? It's going to get ugly quick again, and that can happen tomorrow. So they seem to be timing it pretty well with how they turned it off before they turned it back on. Who's to say that's not going to happen again because people get carried away in this crazy volatility here?
And
Definitely agree. And I think people really need to look at what's going on in the global economy right now and in politics, right? And with the virus and everything like that. Like Peter Dutton got confirmed today. Yesterday we had Tom Hanks, we had Rudy Gobert, we had a whole heap of the Utah Jazz players get infected with the virus. Now Donovan Mitchell's got it. I think the main story, we were talking about this the other day. It's like, what's going to happen when celebrities and famous people and politicians start getting this thing? It's going to cause mass panic. And, obviously we've seen that. We saw the largest dump since Black Friday on the Dow Jones yesterday, and obviously everything else sold off with it, right? I think the thing that people really need to consider, and I mean, it's really grim to talk about this, but what's going to happen when famous people start dying? Like, let's say somebody like Tom Hanks got coronavirus and died from it, and that gets spread everywhere. That's going to cause intense panic. And, that's when we could see something like Bitcoin have another sell-off like we saw today and dump another 50%, and the liquidation engine gets out of control and it goes to $1,000. So I think, people need to be aware of that. Use stop losses for sure, and focus on USD at the moment. I know a lot of crypto traders are focused on getting their Bitcoin value up. In the markets like this, you want to focus on preserving your US dollars and not focus as much on just trying to have as much Bitcoin as possible. And I think more than likely what will happen is we will go into a 1 to 2 month trading range. I think the key area of getting above is probably about that $6,200 level. I think if we can get above that $6,200 level, we can start to see some more uptrend again. But that's sort of a level where I think there's a high, and we need to make a higher high above that, and then make a lower, a higher low, and then higher high again above that. Until that starts happening, expect Bitcoin to continue to go down. And
I tend to agree that we know it affects elderly people. We know most politicians in the US particularly, they're over that 60-year-old. So when they're in the headlines, all those deaths, that's probably when there's going to be the height of fear, and that's probably when the market's going to bottom, and the market's going to bottom before we actually see the worst of it, because after we have those initial scares and deaths, that's when it's going to spread even wider. But I think the market and the fear reaches a climax before the actual case numbers and whatnot. Last thing I'll say, adding to what you mentioned about stop losses, you don't have to have all your chips on the exchange. The last thing you want is to get triggered way further than your stop loss, and there's more capital for them to take off you, as Kyle's dropped out there. But we saw all the exchanges freeze up yesterday, and I know it sucks. I've been trading on FTX. They generally have been fantastic. But yesterday we saw Bybit down, particularly BitMEX has had a lot of issues. The blockchain's congested. That's why Litecoin actually mooned in 2017, because everyone was getting off Bitcoin, off Ethereum, and using Litecoin to send coins to an exchange. So some people have still got pending transactions. So all these learning lessons, you've got to make sure that you learn from them when we go to the next big bubble and you're trying to send coins to an exchange, or you're trading and the exchange goes down. You've got to have a plan B. So we'll wrap it up there, Troy. Thanks so much for joining us. And Kyle's departed early, but that was a great chat. So I'll talk to you guys again soon.
Thanks, everyone. Thanks.
Oh, finally, I'll put all the links to follow Troy and Kyle just down below. Most of you, I'll let Kyle back in here. Troy's gone. Kyle's back. I'm going to put the links to follow all their work down below. Their course as well that they've offered. You guys are loving that. A few of you already done it. So I'll put all that in the description below. But thanks for joining us, guys. Thanks for joining us, Kyle.
No worries. See you later, guys. Have a good one.